Hello, traders. Welcome to another daily analysis. Today is January 25th, Wednesday at 5:16 p.m. Eastern Standard Time. So yesterday we have the CPI data and trade-mean CPI data from Australia. The result was largely mixed. It was mixed to a bit bearish because it was lower than expectation across the board. However, it was not a deviation, or it was not too outrageous. Basically, the economist has predicted a lower soft inflation data from Australia, and what does that tell us is two things. The first is that RBA does have the possibility to cut interest rates further because the inflation continue to be soft. But I also tell us that although the data is soft, it's still within the range. So RBA might cut, but might not cut that fast, because from the last meeting statement back in December, the statement was that they expect to hold interest rate for 2017. So for them to change their stance right away, they will need something that's very negative. Now, we don't have something that's very negative from that data. We do have something that's soft, so it's not strong enough. So they might cut maybe next half year of 2017, but just expectation is that prior to June or May, the interest rate should be kept as it is right now. And because of that, I actually took an Aussie yen trade loan, which I will talk more about it. There was no tier 1 data today in London. The only one is the German iPhone business climate. It's not a tradable event, but still took a look, and it was came out as negative. Now it could be the uncertainty surrounding around the new president of Donald Trump. So of course you do have a little bit a negative sentiment or negative confidence from the Eurozone, as if we don't know, or the majority of the producer in European nation don't really know how the US policy is going to pan out. Crude oil inventory also came out at New York session, which was very largely built. So of course that's very negative for the oil market. But it was expected, as mentioned, when the oil price went up, the oil producer in the US is going to take advantage. So the crude oil inventory, the WTI actually is unchanged today. It doesn't really go anywhere. So why is that? Because right now you really have two strong sentiment to battling each other. You have the US shale producer to continue pumping up their output. You also have the OPEC members continue to cut their output. So these two basically hedge out each other. Now we need to know what's the future. So the future is really dependent on which producer has more dominance over the global market. Now, of course, if the OPEC member really cooperate together, they do have more influence over the oil market at large. So we do still expect the oil price to go up at least to $60 per barrel. But as I keep mentioning, we don't know whether the way up will be a smooth path or it'll be volatile. Most likely it will be volatile. That's just the nature of oil market. So don't hold your breath on that. And if you want to trade oil related currencies such as Canadian dollar, really pay attention to something more internal, because beside oil right now you have to watch out the trade deal between US and Canada. That's going to be a much bigger effect for Canadian dollar. Second thing is, yesterday Donald Trump did sign an executive order to approve two pipelines, North Dakota and Keystone. That also going to be very positive for Canadian oil producer. Hence, it's going to be positive for Canadian dollar. So these two things are something you need to watch out more than the oil price if you want to trade Canadian dollar. Bank of England and Carney actually spoke today. I missed that event actually. It was not scheduled. It was just suddenly came out maybe days before, or maybe I just missed it. Luckily, it didn't really provide too much sentiment into the British pound, so was not really something tradable. British pound, on the other hand, Prime Minister May, because as mentioned, the High Court ruling, it was in favor for the Parliament. So now she is going to publish her plan to seek a parliament approval, the so-called white paper. So what does that mean is that the uncertainty over Brexit has been removed more and more. Remember back then, Prime Minister May was very secretive about her plan. She didn't really like to reveal it to anybody. But right now, because the Constitution, she has no other way, but she has to reveal her plan. So basically, in last week, first of all, she revealed her plan to the press, and then what we saw is that British pound rallied very strongly. And now the High Court ruling that is in favor for the Parliament, and now she has to reveal her plan further to the Parliament. And as I mentioned, for any currency, if you are trading, there's number one key factor that traders or investors do not like, that is uncertainty. So no matter how good the fundamental is, as long as you have uncertainty, people will tend to shy away from buying it. So what happened to the British pound right now is that nothing has changed fundamentally. We still have an uncertainty of outlook for the fundamental. But for now, the Brexit effect ever since last year has really died down. We now know what's going to happen. We now know what the plan is about. And now the plan is going to lay out under the sun in front of the Parliament. So that really further pushed British pound. So British pound is a very strong currency right now. And that's why you see all this rally into the pound. It's because the certainty has been removed. However, you still have to be careful because 1.28, especially for cable, or 1.30 will be a very, very critical resistance for new sellers to jump in. So be careful. Don't buy at the high. That's the only thing I need to maybe warn you if you want to ride this rally. Japanese government released a statement. Now, first of all, Japanese has the positive trade balance, I think from yesterday's data. But the government also released a statement regarding their budget deficit. So what happened right now is that the budget deficit has increased, and it's due to their weak consumer spending and lower tax income. So what happened in Japan right now is still exactly the same picture. Their economy or inflation is still not picking up as expected. So they really have no other way to keep the low interest rate market and keep buying the bond, keep the bond program alive. What's that gonna do? It means that the Japanese yen is still going to be a very negative currency. Now, on top of that, what happened today is that the equity market actually made history. So Dow closed above 20K for the first time. And all European and US equity market are green to signal another strong risk-on sentiment. Now, this is very important when Dow closed over 20,000. It just shows that the market completely regained confidence globally. And there's several reasons. First is that, as mentioned, the fundamental of US is looking very solid. So the Federal Reserve outlook is to raise the interest rate. Now, because of that, the global market are all tightening up. The European nations also have the pretty positive CPI data. All these things, and the Chinese again release another growth in their GDP. So although the future is still full of risk, as for now, 2017 is looking quite positive for the global market. The biggest risk sentiment back then was Donald Trump. Now, ever since he took office this Monday, what happened is you see a consecutive of executive order. Now, you gotta look into the scope. Is that it's not about the executive order. It's what are the contents of those orders. So the contents of those orders, whether you like it or not, it just shows one thing, that he is actually fulfilled his promise, election promise. So as I mentioned last week, that's what I thought would happen is, he had to sort of fulfill the promise at least for the first few weeks while he's in office, because he has to basically be responsible for his voters. But because of that, so traders are really looking forward to his fiscal policy, because right now for immigration, for environmental, for the pipeline, for the refugee, for the Mexican borders, he is fulfilling his promise. So what comes next is that he is going to remove the banking regulation. He is going to cut the tax. All this just signal that if he fulfill his promise, That means the US economy will be overheating, and that means the Federal Reserve has to raise interest rate faster. And that also means that the bond yield will climb higher, and then all other nations, Europe, Australia, New Zealand, and all other nations will have to catch up, things like that. There will be a very risk-on sentiment. So that's what happened right now. That's what you see. So this sentiment is expecting to continue for at least for now. So the global market is facing a strong risk-on sentiment. Of course, that's going to help the high yield currencies such as New Zealand dollar, Australian dollar, and Canadian dollar. That's just in the risk sentiment part. Now, New Zealand dollar today had the CPI data which came out very, very strong. So although it's not outside deviation, we didn't really trade. We're very tempting to trade because it came out as very strong. Now, on top of that, Australian has a negative, not negative, a soft CPI yesterday. So right now, New Zealand dollar has become the strongest currency. You have risk two major forces. First is the risk sentiment. Second is their own fundamental. So that really completely remove, I shouldn't say complete, but remove the interest rate cut from RBNZ at least for the next quarter. And that will be very positive news for New Zealand dollar to continue surge higher. Australian dollar, on the other hand, also has a soft CPI, but still largely benefit by this risk-on sentiment. So you will expect to see it keep going higher. The losers in this kind of current sentiment, of course, will be the Japanese yen and Swiss franc. Now, US dollar will also be the loser because the safe haven status. But US dollar, you have to understand that also sentimentally, it might be pressured a little bit. And also because trader investor at large are still kind of uncertain about Donald Trump. But you have to understand that fundamentally speaking, as long as he fulfill his promise, and if you see the further executive order for the fiscal policy, or he really start to remove the banking regulation, that's really going to overheat the market. And the Federal Reserve is going to raise the interest rate, bond yield is going to go even higher, and the US dollar will keep going higher. So fundamentally speaking, US dollar is really looking very strong. But you just have to find a better level to buy. But right now, the short thing will be New Zealand dollar and Australian dollar. The short loser will be Japanese yen and Swiss franc. What about other currencies? So US dollar, as mentioned, fundamentally strong, but sentimentally a little bit pressured. You do have to find a better level, or at least at a better time frame to trade it. Canadian dollar is really up in the air because, as I mentioned, you have basically a sort of two forces to battling in the oil market right now. You have a strong sentiment from two oil pipeline, but you also have a strong negative sentiment because the North American free trade deal that is about to renegotiate. So it's kind of neutral. I wouldn't really trade it because I don't know which direction it's gonna go. Same thing as Europe. Now Europe previously I say it's a strong sentiment, but right now if the risk on sentiment continue to go up, what happened to Euro is that they will be a little bit lagging. So although nothing really negative to push them down, but because they're not catching up as fast as New Zealand dollar, Australian dollar, or even US dollar, so it will be a bit lagging for Euro to go anyway. Now, providing that if ECB continue the easing policy, so at least before April, that's if you see the global market keep heating up, the euro will be a little bit bearish because they are not catching up as fast as other currency. For British pound, on the other hand, might keep going higher because of this risk sentiment. The only thing you need to watch out for sure is those important levels such as 1.28, 1.29, and of course 1.3 for cable. Okay, so let's take a look at our chart. So as mentioned, I did took an Aussie trade. I am actually long Aussie yen right now. So this is a 4 hour. So what happened? Let's take a look at hourly. So yesterday, after the CPI data, we have this huge drop, right? It's about 7:30 it came up. So we have huge drop basically from 18,650 to all the way to 85.40, about 100 pips or so. Sorry, about 100 pips or so. So what happened is that I actually buy back. Now the reason I buy because of the fundamental. So first of all, the drop was very fast and was huge in accordance with the daily range. So if you look at Aussie Yen's daily range, and that's usually how I trade intraday trades, first thing I look at exactly what's the daily range. So the daily range is about 80 to 90 pips. So 80 to 90 pips, but you have this kind of 100 pips, 120 pips of drop. For me, that's a sort of emotional reaction. Now, when you have this kind of emotional reaction, I often revert back to the fundamental. I look at the data and knowing that, hey, the data, although it's not promising, it's just soft, right? It's not really negative. So on top of that, I suspect the risk on sentiment will be continued, and which it did for today. So that's why I basically lay out my plan to buy back Aussie Yen at a good level. So I got in at this range area and has been riding it up. But now we are sort of, we did have a higher high right now, but we don't know what's going to happen. I do expect to maybe go to the sideways because tomorrow is an Australian holiday. So we will have a thin liquidity for Aussie. So I do expect to go to sideways. But the reason I'm still holding it because now Dow has made 20,000 in equity market. I do expect the risk sentiment to at least continue to go on until this Friday. So that will further support Australian, and that will further push and pressure Japanese yen. So that's why, fundamentally and sentimentally speaking, I'm still holding the Australian dollar. And technically speaking, for hourly chart, we are having this lower low, lower low, lower low. So that's why I'm holding it in terms of hourly. If you're looking at 4 hourly, after the huge drop, we do have this strong bullish candlestick. We also have another swing low at 85.37, another one at 85.35, another one at 85. So these three will be a critical point. This is my stop loss all the way at 84. So this will be the critical point for me to maybe do an early exit if we unfortunately come down and close above any of the swings. So we'll have to see what happens. But that's one of my trade right now. And other than that, I don't really have anything for intraday trade. I am actually testing my other system right now, forward testing, but because it's not mature right yet, so I don't really want to talk too much about it because it's just a testing. But this is a more certain thing. This is a more like a risk event trade for me. I'm still holding it. We'll see what happens tomorrow for me. Another trade, daily trade, I'm still holding is the Euro New Zealand. So as you can see, because of the New Zealand dollar CPI, we actually had a huge drop today. This thing actually only came, I think, at the last few minutes. Let's take a look at it. So yeah, it only came, if you look at it, it actually just came at 4 o'clock, 4:30, 4:45. So for Euro New Zealand, today was actually largely in the range. You have basically for Euro New Zealand, you were really trading inside this box for today. Nothing has changed. You have between 1.4775 to 1.4850. Less than 100 pips. You're just going up and down, only until the CPI data to push it further. So of course, it is a great news, but that's one of the reasons I did not take off my trade. But that's also one of the reasons I don't do anything about it back then, because it can, understand you have to look at exactly what's driving the price action, and understand that it can easily go the other way if today's CPI data is an upset. So understand that you as a trader really have no control for any future fundamental data. The only thing you can do is control your risk. So don't basically don't bet into that. I really personally don't like to trade into a risk events, although you could make good profit. But for me, it's just 50-50, right? Because nobody really knows the outcome. But just to let you know that if you're only looking at a daily chart, you might think it's been selling for a long time, but actually it's been ranging for a whole day. So all these things, as you can still see, is keep dropping. We are tasting 1.47, this important handle right now. This is all from the CPI from New Zealand. So 47, as we are right now, it will be important handle. Let's take a look at weekly, see where we at. So that's not a low, historical low. Of course, looking back, you have this really low area, things like that. But at least 2015 April, we did went to 1.4. So you still have about 700 pips to go for historical low. And let's take a look at daily. So again, I got in at this bearish big shadow, still holding it. So my plan, of course, is still keep at break even. I might actually move to 1.4950, which is really not much about my entry at 1.4962. So because the fundamental and sentimental are all working out very well for this trade, so really not looking to do anything about it, but just keep holding it. We might see a fresh new buyer coming at 47, which is fine, because for me right now this trade is fundamental and sentimental are both working out. So that's pretty much my trade. Let me actually take a look at my Aussie Yen daily chart. So yeah, if you look at daily chart, like I say, we might just go into a range for tomorrow since it's a major holiday. But looking at daily chart, we are still looking quite well to go upside down. This is more like a classical ascending triangle. So of course, I do look forward to see what's gonna happen. But right now, I'm holding it for now. So let's take a look at our 28 currency pairs. Just give me 1 second. All right. So first, let's look at Euro Pound. So Euro Pound today, as I mentioned, Euro will now be sort of pressured, not because anything negative, but because they are not catching up as fast as other currency in the current risk-on sentiment. Euro Swiss is virtually a sideways movement. Euro dollar actually will also be in the sideways movement. The reason is because US dollar also is not catching up to the current risk sentiment, right? So again, the sure thing will be New Zealand dollar and Australian dollar. The sure thing will be selling Japanese yen and Swiss franc. All other currency will sort of be in kind of indecisive movement. British pound will also be very strong, but just watch out for a large seller into critical levels. So Euro dollar, again, I am still looking to short it. This is a very good area. This is all very good area. 1.8, 1.8, 1.08, 1.0850, or even 1.09. This 150 pips will be a critical zone. As soon as I have a nice daily signal, I am going to sell Euro dollar based on the fundamental reason. Euro Aussie, on the other hand, we got this huge climb up because of the negative CPI from Australia, only soon to be dropped. And this is all just showing me that Australian dollar is quite strong right now. It's not really a bearish big kangaroo tail. You can just look at that. It doesn't close low enough for the body. And nevertheless, I already have Australian dollar trade, so I'm not going to do another Aussie trade. But if you are flat, Euro Aussie is good to sell. This also is not a perfect signal. It is a good spot to tell you that the seller basically lost the battle. You could sell it at low of 1.41. And the only thing to watch out, of course, is 1.40 will be a critical handle. Or you could simply wait for it to climb up more. Euro CAD, on the other hand, I don't really have either direction for this one for now. Euro New Zealand will be another good one to sell, which we are already in. So Euro Yen, again, both are negative currency for us for now. Pound Swiss keep going up, and cable also keep going up. And look at that, you are actually had this bullish kangaroo tail, continuation of bullish kangaroo tail, and now we are closing above 1.25 very solidly. So what's gonna happen here? let's take a look at that. You have a very critical support at 127.45 or 27.50. You are about 120 pips away, but it can easily break above. For British pound, the higher you buy, the more risk you have, because it is still a fundamental weak currency. So if you're buying cable, you have to understand you are trading in the opposite of the fundamental. So I am actually in a British pound trade right now. I'm not in cable because if I want to buy British pound, I will choose pound yen or pound Swiss franc. That way I have a better sentiment on my side. I'm probably not going to trade cable for bullish for buying it. I am still looking to sell at all this critical area. Let's take a look at Pound Aussie. Pound Aussie is the same thing. It actually climbed up, but I'm not looking to do this trade because they both are quite positive for now. Pound CAD is in the same story. Pound Newsy, same thing. Not looking to buy or not looking to sell. Pound Swiss is the one I'm looking to buy, and the Pound Yen is also the one I'm looking to buy. So as mentioned yesterday, that you do have this nice big shadow engulfing candle, but as mentioned, 200-day moving average will be a critical resistance, and that's what happened today. You actually touch it and now close down. So we'll see what happens, whether it breaks above or whether it failed to break above. So we'll see. Tomorrow, Prime Minister May is going to release that white paper in front of the Parliament. Although that's not a big risk event, that will play into a risk sentiment for British pound. So be careful if you're trading it. But for me, if I want to buy, I will buy against pound yen or pound Swiss franc. Swiss franc, Japanese yen, really a sideways movement. Nothing to talk about in this currency. Dollar Swiss continue to be a sideways movement. Dollar CAD, on the other hand, dropped. We completely basically erased our previous strength. This was from the Bank of Canada's statement. We saw a panic into selling Canadian dollar and buying US dollar. Then this is due to the inauguration, and now it completely erased all the previous profit. And what's gonna happen right now? I don't know, to be honest with you. I don't know what's gonna happen to a dollar CAD. So if I'm not sure, I will stay out. For me, fundamentally, it really depends on what happened to the North American Free Trade Agreement. That will be the key factor to determine the future of Canadian dollar. Dollar yen, on the other hand, we did not go up. It's just a sideways movement as mentioned. Yes, 1.11250 is a good support, but we don't know where this thing is gonna go. If you look at that, you actually have this kind of, descending triangle. But it is, if you consider the bigger trend, it is ascending. It should go up, but forget about the name of this triangle or the thing. It just tell you that it's going to go to sideways movement before it finds a direction. It's either gonna break above or it's gonna break down. So we'll see if 1.250 hold. For me, the outlook, of course, is to buy into dollar yen because of the fundamental. But right now, as I mentioned, both currency are pressured from the risk on sentiment. So maybe not a good timing to get in right now. And we don't really have a signal also. Australian is the one I'm in right now. As mentioned, if you're looking at all these long tail, you'll know that the market has been kind of emotional when selling Aussie due to the soft CPI data. They soon picked up to realize it's not that negative. So that's why I'm still in the Aussie trade, because I do expect it to keep going up. Now, Aussie dollar today have a beautiful kangaroo tail. As I mentioned, I'm already in Aussie trade, so I'm not going to get into another Aussie trade. But if you are flat, Aussie dollar actually is not bad to low. You could put, depend on your risk appetite. But if you want to do it, you could put your stop loss just below this 200-day moving average. and then see if you can ride this trade all the way, just keep riding it up. This is more like a mid-term to long-term perspective, all the way to 0.78 or 80. But if it were me, of course, I maybe choose something like Aussie Yen or Aussie Swiss, because I have a better sentiment. But it is a nice signal to get in today. So if I were flat, I will consider getting into Aussie dollar. Aussie CAD, on the other hand, will be another good area to buy again at this 200-day moving average. Aussie New Zealand, on the other hand, it completely lost the battle to New Zealand dollar. So the beginning of this week, we do have this beautiful big shadow, bearish big shadow. I did not get in very simply because we have two CPI coming out, one from Australia and the other one from New Zealand. When facing these kind of risk events, I definitely don't want to get into it. Of course, a lot of people looking at hindsight, they say, oh, you should have get in, that you can make money. That's true. But you are basically looking at the past with a future result. So that's not really the way how life works. You don't know what's going to happen in the future. It's always very simple to say, look at this kangaroo tail. Of course, it's going to work out. Well, I can tell you 1,000 other examples that it does not work out. So don't fall into this kind of trap, looking at the future data and then telling yourself you should have done this and that. I understand that trading is always trade into an uncertainty of future. That's why it's one of the hardest job, because every day you are dealing with this kind of uncertainty of risk while you put your money at the line. So that's why, you have to be fine with this kind of thing. You say, hey, I know looking at hindsight, I might feel like I missed out a trade, but not really, because you didn't enter for a few good reasons. And as long as it's valid, then be happy with whatever outcome it is. So whoever got into this trade make money, I'm very happy for them. Whoever did not get into this trade, I'm also very happy for them. So it just goes to in both ways. And so what's going to happen, of course, it's continue going lower. Most likely it will reach this low to, again, test the handle of 1.3 right here, or 1.0350. But as for now, fundamentally speaking, this will be a very good pair to short, because they both are a risk on sentiment. So again, you hedge out a risk, but New Zealand dollar has proven its value over Australian dollar for now. So will be a good pair to short if you have any reversal retracement at 1.0450 or even 1.05 will be another good chance to get into it. Aussie Yen, again, that's the trade I'm in right now. I'm really looking forward for it to at least testing 87 or 86.50. That way I will have, again, enough room to move to break even. But I'm really looking to at 87 or even break above. That's my outlook for now. I don't know what's going to happen. If you're looking at the average daily range, it is shrinking more and more. So if you look at that, if you just look at this, you'll know that the range is getting smaller, means that the volume is also getting smaller. Not much people are trading this right now. It's just a sideways movement. So that's what's gonna happen to the Aussie Yen. And again, tomorrow is Australian holiday, so I do expect a thin liquidity to make it go to sideways. Cash Swiss franc, on the other hand, surged up due to the risk on sentiment to help Canadian dollar. Again, I don't have enough reason to buy Canadian dollar for now. If you are in CAD, look at what happened. You don't really have a strong signal after this bullish signal. Now, whenever I have a bullish signal coming after is with this kind of signal, although it's not negative, it gets me worried, because when I have a bullish signal like this, I want something to follow up. When I have a bullish signal, I want at least, this is not ideal, but you want at least something to follow through. When you have this small candle after the bullish signal, it's just kind of worry sign for me. And this is very similar to dollar yen. You have a bullish signal, you have a very small candle. So it's a beginning of the worry sign. And then this is really a trouble. This is really big trouble for you. And now you are really just in a sideways movement. For New Zealand Swiss, again, beautiful trade. Now, if we were in this trade back then, again, we got stopped out by the whipsaw. It is what it is. I could have put to 1.7550 as my stop loss. But the thing is that I sometimes, again, tighten my stop loss maybe too close due to a resentiment. This is something I'm still learning, to be honest with you, to how to manage my trade well. But looking at hindsight, of course, it's a bit of shame because this thing also worked out very well. So right now, what's going to happen is that critical resistance, you already broke above, but we'll have to see what happened to tomorrow's candle if it closes above. So we'll see what happened. But as if for now, it is a good trade for New Zealand dollar. This is January 26th, so this is actually today's candlestick. This will be, so we'll have to see what happens tomorrow. If this one closes with a green solid, then yes, I do want to get into a New Zealand trade. New Zealand dollar, on the other hand, another similar signal. Again, we have to see what happened to tomorrow if it closes above it. New Zealand CAD, it's the same signal, and New Zealand yen is exactly same signal. January 26th. 82. Now, is this today or is this kind of confused? Let me take a look. Yeah, this is after 4 o'clock. This is more like today because it's after New York session already. So this is really the beginning of Asian session. New Zealand dollar, it's a little bit weird just because it's the New Zealand and Australia, they open at Asian session. Sometimes the time zone or the way they break the daily chart is a little bit different. So that's why I always go to hourly just to get a clear picture. So right now, really this candlestick come at 4:45. This is really considered the beginning of Asian session. So if I'm trading daily, I will want to see if this strength can follow through for the next 24 hours. If it did follow through, then yes, it will be a good trade to enter for New Zealand yen. On the other hand, if you say you want to enter on this green candle, you could also do that. You could also put a pending limit order here, maybe a stop loss below here to trade New Zealand dollar, to trade New Zealand yen. I might actually consider to do that right now. The only thing I have to watch out again is this kind of high right here. But New Zealand yen and New Zealand Swiss, I am looking to enter it. New Zealand dollar, on the other hand, is also good to enter, but I will have to wait for tomorrow's close. Aussie New Zealand will be another one good to short. I just need a good signal. So as for now, I am looking to enter New Zealand yen or New Zealand Swiss. Now I'm already in Aussie yen, so I don't want to get into Japanese yen trade. New Zealand Swiss will be a good one, but I don't have a signal. I really will have to wait to see what happens tomorrow. We might really completely reverse. It can happen because a lot of traders might want to take their profit, or they just simply don't want to keep buying this currency. You never know what's going to happen. So that's why technical charts, of course, is always important, because you might have this kind of strong movement comes down with this kind of signal to tell you, for whatever reason, people just don't want to keep buying it. Then what comes next will be a solid red candle. So we'll see what happens tomorrow. New Zealand yen, again, if I'm not in Aussie yen, I will looking forward to actually buy New Zealand yen. Looks like a good pair to buy. So that will be a few things I'm looking at. Aussie dollar be something I'm looking to trade. New Zealand yen will also be something I'm looking to trade. Both will be long because I am currently in Aussie yen, so I don't want to get into any trade for Australian dollar or Japanese yen. If you are flat, the New Zealand dollar will be a good one. New Zealand yen will be a good one to buy, or Aussie dollar. Other than that, I'll be back tomorrow just to see what's the update. Let me take a look at tomorrow's risk events. So tomorrow, Thursday, let me refresh it first. So tomorrow, Thursday, it don't have anything on London. We have a preliminary GDP. All right, this will be important tomorrow. We'll see what's the expectation, 0.5, and the previous is 0.6. So GDP, of course, is very important to tell you exactly where UK is after the Brexit. So we'll see what happened. Again, I don't have a bias. I will trade with positive data and sell with negative data. Which pair I'm gonna choose really depend on what happened in London session, but most likely if I want to sell, I'll sell against New Zealand dollar. If I want to buy, I'll buy against Japanese yen. That would be the bull part. You have a Eurogroup meeting. They will talk about the Greece debt issue and the bailout package. Not really a tradable event, but if you are in Euro, then be careful. Then unemployment claim, this is again not a tradable event, but it just gives you a sort of hindsight of the labor market. Now, previously, it's all quite positive to show you the labor market is very solid. New home sale, again, not a tradable event, but will tell you where the mortgage rate is right now. We do have a higher application for US mortgage rate. What does that tell us is that people are afraid that the mortgage is going to go up. So really, the market has shown that the buyers are predict the mortgage rate will go up to buying the mortgage at a faster speed, and that will further make the basically make the assumption become the reality. So if the mortgage rate climb up, the high yield climb up, then the US interest rate will go up, further push the US dollar. Tokyo core CPI and national core CPI will be something to look out for. It's not tradable for me, but look out for what happened to the Japanese yen. As mentioned, if we have continued negative data, it will continue to basically show you that the Japanese yen is still at a very devaluated status. It's really still a negative currency. And that's pretty much it for tomorrow. And we'll talk about what's going to happen Friday. But that's it for tomorrow. Tradable events will be the preliminary GDP, quarter to quarter. If you are in for London session, you can watch out for the Parliament of Prime Minister May about the white paper and just how that's going to pan out. So that's it for now. And definitely keep your eyes on Donald Trump. Whether you like him or not, it's going to rattle the market up or down for at least this first few weeks of his office. So that's it, guys. I'll be back tomorrow with another daily analysis. Just to recap, Aussie dollar is looking pretty good to long. You do have the fundamental and sentimental on your side. New Zealand yen will also be good to long. We are don't get into this candle, but instead this one will be a nice one. You can put a pending order here. You can put a stop loss at the low of this candle, or if you want to be more conservative, you can put at this low. Really depend on how you like to manage your trade. I know the high looks like very close, but fundamental is really in your side. You actually have this kind of, I don't know the name, but this is like a spoon. I don't know the textbook name, but it is a bullish signal when you have this kind of, a sort of half round signal. So it does look like it's gonna break above. So and you're not really at historical high. You still have a lot of room to go. So a good pair to long if you don't have any Japanese yen trade right now. It's a good one to get into it. Okay, so that's it, guys. I'm actually really tempted to get into it. I will actually see if I want maybe increase my risk. Normally I don't do it, but because the risk sentiment, especially when Dow making 20,000, it's really a very strong sentiment. So I'll see what happens. Other than that, I'll be back tomorrow with another daily analysis, and I hope this video is helpful. If you have any question, feel free to ask. Thanks for watching. Bye bye.